Hey guys, in this video I'm sharing the RSI Supreme Multi-Method is being promoted as a highly accurate trading indicator for its ability to identify overbought and oversold conditions in the market, as well as spot divergence. The claim is that it provides signals that are 10 times more accurate than the traditional relative strength index. This trading strategy is a combination of volume price analysis and peak RSI buy and sell signals. Its goal is to find and profit from overbought and oversold markets. So if you are a day trader who likes to trade on smaller time frames like 5 and 15 minutes, then this strategy is exactly what you need. Pay close attention to the details I am going to explain in this tutorial so that you can catch such trends in any market. Traders, if you like my educational content, please support the channel by like this video and subscribe my YouTube channel. This channel is the best place to find original trading ideas and profitable strategies explained in the simplest way possible. Without any further delay, let's begin. First, open Gold Spot Chart on TradingView and click on Indicator tab. Search for RSI Supreme Multi-Method by Jacob Maglaby. Click on it to install it on the chart. So the RSI Supreme Multi-Method is an innovative tool that combines the relative strength index with selectable manipulation methods to identify overbought and oversold conditions in the market, as well as provide the ability to detect divergence for enhanced trading insight. In the indicator's settings, you can find various customization options. The first block includes RSI length, overbought and oversold values, and RSI type. Personally, I recommend changing these levels to 60 and 40. This way, the indicator will be more responsive to price fluctuations. As for the RSI type, there are 4 options available. When the standard RSI method is enabled, the indicator uses the traditional RSI calculation to identify overbought and oversold areas. The volatility-weighted RSI method applies a volatility formula to the RSI calculation, allowing for a more responsive indication of market conditions during periods of heightened volatility. The smoothed RSI method utilizes a smoothing algorithm to reduce noise in the RSI values, presenting a clearer representation of overbought and oversold conditions. The length of the smoothing can be adjusted to match your trading preferences. The last method is session-weighted RSI. With this innovative method, you can specify multipliers for different time sessions throughout the day to manipulate the base RSI. Each session can be customized with start and end times, enabling or disabling specific sessions and specifying the multiplier for each session. This feature allows traders to adapt the RSI to different market sessions dynamically. You can choose whichever method you like. For this strategy, it is best to choose a session-based method. Additionally, the Apex multi-method indicator draws divergence on the oscillator, providing an additional layer of RSI analysis. Divergence occurs when the direction of the RSI is different from the direction of price movement, potentially indicating a change in trend. For example, when price makes a lower low but the RSI makes a higher low, the indicator marks it as a bullish divergence. Traders can expect price reversal. Bearish divergence occurs when the price forms higher highs but the RSI forms lower highs. You can expect a change in prices soon. This method can sometimes work, however, I wouldn't recommend relying solely on these variations. Another way to use the Supreme RSI indicator is to analyze overbought and oversold signals. The indicator consists of fixed areas of supply and demand. If we look closely, we can see green, red and orange dots around these areas. A green dot indicates that the RSI line has entered oversold territory, while a red dot indicates that the line has breached overbought territory. Blue dots indicate that the indicator remains inside the oversold or overbought zone. The longer it stays there, the more likely it is to reverse in price. An orange dot appears when the RSI leaves overbought or oversold zones. Based on these signals, we can confirm buy and sell trades. For the second indicator, go to Indicator tab and search for Volume Profile Bar Magnified Order Blocks. Click on it to install it on the chart. The second indicator of this strategy is probably the most significant one. Why is that? You might ask. Well, it's because this tool analyzes the market in a totally new way. Unlike standard order block indicators, the volume profile order block tool pulls data from lower time frame bars and assigns it to various segments of the order block. By providing this volume profile inside the order block, the indicator supplies a deeper, multidimensional view of market activity that can enhance your trading decisions. Crucially, users have the ability to fine-tune the detection of order blocks. This is made possible through a single input setting called tuning. This integer value allows you to control the significance and frequency of the order blocks. Higher numbers will produce more significant order blocks, though they will appear less frequently. Lower numbers, on the other hand, will yield less significant order blocks, but they will occur more often. This enables you to adjust the sensitivity of the indicator according to your specific trading strategy and style. You can also customize the level of detail in your volume profile by selecting the number of segments you want inside each order block. I prefer to set this number to 7, so what is the best way to use these indicators in practice? Before I show you the strategy, let me first explain what an order block is and why it is so important. In trading, order block refers to a price area where large institutional or significant orders were previously filled. These regions can act as potential turning points in the market as they represent the areas where major players have shown interest. Here's a simple analogy. Imagine you are at an auction. Let's say there is a rare painting that interests many people. Some big collectors put high bids on this painting. Even after the auction, people remember the price level where these big collectors showed interest. Now, the next time a similar painting comes up for auction, people will be watching those price levels closely, wondering what, last time, major collectors were willing to buy at that price. Maybe it's a good value. This memory of past interest creates a psychological level in the market. In trading, an order block is like a remembered price level from an auction. Traders watch these levels because they believe that large players may be interested in trading at those prices again, either buying or selling. In essence, an order block is a zone of interest based on past institutional activity, and traders use it as a reference point for potential future price reactions. Based on the knowledge we have learned, let's move on to one of the trading strategies you can try with these indicators. For a long setup, the following conditions should be in place. First, the price must revisit an order block. However, the candle bar must not exceed it. Second, a reversal candlestick pattern must be formed during the retest. It can be a pin or an engulfing bar. Third, the supreme RSI must become oversold. A long position is opened when an orange circle appears on the RSI. Target 1 is to 1.5 risk to reward ratio. Apply a trailing stop loss as soon as the price has moved in your favor. Remember, do not risk more than 2% of your account per position. Do the opposite for a short setup. First, you can hear the price to retest the order block. Second, a reversal candlestick pattern must be formed during a retest. Finally, the RSI should become overbought. A sell trade is initiated when the RSI leaves the overbought zone. This is confirmed by an orange circle. Apply the same money management principles as for long trades. We looking here this trade 1. I hope this video can show you how the indicator works and how you can use it to enter profitable and powerful positions. If this video is useful for you, then please like it and subscribe the channel for more new strategy. See you again soon. Thanks for watching our video.